I'm going to show you, or at least talk about, the best formula to find gaps up. I'm not going to discuss gaps down in this video, but the formula consists of three separate pattern groups. The one pattern group, the proximity pattern groups, and the trend down touch, specifically trend red. When you find these three patterns together on one symbol, those three together inherently give us a gap up next day. This is the single best formula to locate a gap up. Now, by definition, the one pattern gaps are, for example, a right leg W higher that appears in the vast majority of the 22 market force recognition indicators. If you are coming to this video and have not listened to many other videos, you'll understand that the system has 5 subcharts: the price chart, the trend chart, the zip chart, the power chart, and the swing chart. And the 22 market force indicators are on those charts. The candle chart holds 4 different bands: a gray channel band and 3 sets of Bollinger Bands, or standard deviation bands, upper and lower bands for each, along with the master long-term trend line. The other 5 charts hold the 22 market force recognition indicators, the 7 short-term trend line indicators, and the special use indicators: swing gray, which is a deep cycle indicator, and swing blue, which is a crossover indicator telling us and defining uptrends and downtrends as they cross over red, swing red, and swing green. The 22 market force indicators were selected out of about probably 13 to 1400 indicators that were created over a several year period. I made my first trade in 2007. For 2 decades, I was a real estate developer in Minnesota prior to that time. And I wanted to have a system that I could find, or a method that I could find, that would give me some ability to win consistently, because my inconsistency was horrible, and I truly did not understand market forces and market pressures at that time. I was a beginner in 2007, and I'm proud of it. I made my first electronic trade in 2007, and that condition of me being a beginner gave me the ability to properly design this system. There are 3 powers in the system: the indicator power, the formula power, and the procedures power. The indicator power is obvious. There are 22 market force indicators that we selected out of over 1,000 that would give us the responses, or identify the market force pressures, that these tiny pressures that would move prior to the major price movement of the candle for a day, if you're on a daily chart, or by the hour if you're on an hourly chart. Now, these sensitive indicators, at least the 22, are the ones that control, or what we look at to identify those tiny changes in pressure. The 7 short-term trend lines are 3 groups of lines. The trend trio. Pink is in the middle, and then you have blue and yellow. The other group is swing red and green, and power green and orange. Those 7 lines make up the short-term trend line. Unlike the master long-term trend line, when we decided that when we created the master term trend line, we tried to do one line with the short-term trend lines, but we could not do that. There were too many factors involved, and as a result, we created 3 groups of lines that became what we define as the short-term trend. And with the short-term trend, we can see pullbacks, we can see rallies, we can see those things that day traders need to be able to identify with. Much faster than that are the narrow lines, the fast lines, the zip red, zip gray, trend red, trend green, the swing pink is a price barometer, and barometers, in the price chart we have 3 lines: the green, the red, and the blue, and all 3 of those are a price barometer. And the price barometer, and along with that, we have swing Zion. We have 5 different price barometers on the charts, and they move in the exact same direction as price does each day. Again, if you're trading on the day chart. When you have these indicators, and the indicators have formed 2 different groups that we call patterns. These patterns were identified and recognized over the years, and when we finally zeroed into about 30 indicators, these patterns became available to us visually. And so we took these patterns, and we have pattern types up and pattern types down. In each of those groups are 20-some patterns that we can use to identify which direction price is going to go next day or next period. Now, those patterns also have conditions, and we'll refer to them as good conditions. When a specific pattern has a good condition, then it also becomes a high probability pattern. And then the third thing is the signals. When we enter or exit a position, we use signals, which are indicator lines, to identify what those, or when the time is correct to enter that position or exit that position. Patterns, conditions, and signals become your formula power. If you had 10 patterns, and those 10 patterns were let's say a red spike. By the way, go to the abbreviations documents and look up the abbreviations, because I talk much in abbreviations and I write much in with abbreviations in the textual documents that you find. Numerous information can be obtained in the in the documents index, which is a list of about 32 items that define issues, define conditions, definitions, just all kinds of things. Now, back to those 10, if you took those 10 patterns, we saw the patterns, but they didn't always work. Some of them went up really strong. When I say really strong, I mean that the candle was 2 to 3 times bigger than the previous 2 to 3 day average. 2 out of 10 times those candles would be big. Another 5 or 6 times the candles would be correct in the price direction that we anticipated, but a couple of them might even go down. And so you had bad indicators, poor indicators, and good indicators. We only choose the good indicators, meaning the good conditions that go along with the patterns that are selected. Those 2 out of 10 become high probability patterns with good candles. Now, the formula of taking patterns and picking those conditions that are good for that specific pattern create the high probability choices that we make. When I say we trade only high probability choices, that's what I mean. That's how we arrive at picking high probability choices every time we trade. Now, the procedures power is when you, for example, you picked up 10 indicators on a scanner. They're all red peaks, and then you analyze and you find the conditions and you make your decision and you determine that only 2 work for good conditions with that pattern at that particular point in time of what you've found. And you could have located those on the scanner or on the radar screen or wherever you picked them up. We show you how to search for patterns. Those good patterns, that method or that procedure, that process that you take to analyze those patterns each and every time you make a trade is what we refer to as the procedures power. I specifically wanted this type of ability when I created the system that I was going to use. When I started, I never planned on marketing or sharing it with other people. I was just going to use it for myself, and then it became so unbelievably accurate, we just felt that we needed to share it. The patterns, when we have search methods, or for example, when we're on the radar screen, we've got indicators. They're called the MF22, and then the name of the indicator is after it. And there's 22 of them representing the 22 market force recognition indicators that ultimately became our ability to see tiny market force movements. Prior to them making the big movements in the actual day of the range that the candle was in, the high and the low of that candle. Now, these three powers, the indicators are the heart of the system. The formula power is the method or the procedure on how you determine and find high probability trades. And the procedure power is this analysis that you make day after day, examination after examination. And it's that power that I knew that when I was building this system, it had to have that ability, because I was not going to make a choice based on somebody else's algorithm. I wanted to see markets move. I wanted to understand how they moved. One of the greatest relationship you have between indicators is price green, price Zion, and I've said that wrong. Zip green, zip Zion, and zip pink. Zip pink is the price barometer. It goes in the direction of the price. Zip green tracks buyers in and out of the market. Zip Zion tracks buyers in and out of the market, but Zip Zion is the grandfather to Zip green. Zip Zion moves slower. It takes more power to get it to the extremes. And when I say extremes, I'm talking about at 100 or at 0. What it tells you is that when Zip green is at 100, there are a lot of people entering the market. When Zip green is at 0, there are a lot of people leaving the market. When Zip Zion is also at 100, there are huge numbers of people leaving the stock. In a pink-green top, again, you may want to come back and look at this video again if you don't understand the patterns and the names that I'm talking about, because that's the first thing you need to become familiar with. But a pink-green top has, by definition, has Zip green at 100. It's been there at 2 or more days. And Zip green is, and Zip pink is right next to it and directly under it, and it's going up. That particular definition is what defines a pink-green top. And it is a reversal pattern. And the entire system is built on reversals and patterns and indicator methods that show us reversals in trends, cycle bottoms or cycle tops. Like I spoke with you about the swing blue that crosses over the swing green and swing green lines, when the blue, in an uptrend, when the blue crosses the red line never crosses the green line. They're a pair of lines that run together, but they never cross. That's not true with almost every other line in the system. That's the only pair that does that. When blue crosses over the green, you have the start of an uptrend, but sometimes those uptrends can be very weak. When blue is above red and going up, the uptrend is more solid, and until blue crosses down, then the uptrend stops. But the change in direction is not, we do not use those lines. Those are slow moving lines. The fast lines are those zip lines. They're on the zip chart because they're fast. The two fastest lines are zip red and swing pink. They're also leading indicator lines, if you understand that term. I share this information with you to give you an idea of how and why these things work. The proximity groups are 4 power lines, or excuse me, we call them the power 4. That's the blue, pink, white, and yellow. When they're located above the power green and orange lines, the green and orange are 2 of your 7 short-term trend lines. When they're located above the orange and the green, you are in the location for a proximity group gap up. However, if you go to the proximity group gap up patterns, you'll see seven different patterns that we identified with that show us an arrangement of indicators that will give us a gap up situation. And power and green have to be going up, and they're usually close together, and they're usually above zero. Sometimes one of them may be slightly under zero. They're always near the zero line. Down touch patterns, specifically trend red and trend green, you have the three fast lines: trend red, trend green, and trend gray. The trend trio are three slower moving lines. They are what determines and shows us the short-term trend direction, and that is the yellow, pink, and blue. When you have a down touch, the pink line is in the middle, and when trend red or trend green down touch trend pink, you get the greatest reversal reaction. They trend red, green, and gray will down touch the blue, the pink, and the yellow, and the zero. And we also have one of the situations is that trend red we call it down touch under zero. That's when it goes under zero, and trend green down touches either the blue, pink, yellow, or zero line. High probability that it reverses back up. Now, when you have the proximity group with one of the 7 patterns, you have a trend red down touching. The best down touch is a trend red. It can down touch any of those wide lines, which are the 7. We draw the 7 short-term trend lines in the charts wide, so that you become familiar with them. And it's the narrow lines that down touch the wide lines, or the 7 short-term trend lines, or 0, or 50 in the case of the zip chart. When you have the proximity group with the 7 patterns, you also have a trend down touch, trend red being the best line to have a down touch, trend green the next best, and trend gray the least. When you have a proximity group with one of the 7 patterns, you have a down touch with trend red or green, and you have a majority of the indicators in one pattern, and by that I mean a majority is 12 out of 22. When you have 12 out of 22 identical indicators, you then have what we refer to as a one pattern group. When you have all 3 of those conditions, and they happen a lot, when you have and I will say that trend red is almost always in the gap up pattern, or a gap up stock. And so now we've got 3 major patterns that are there at the same time. Those are that is the best formula for determining a gap up next day situation. You find, or you locate these gaps. For example, on the radar screen, we have each one of the indicators identified. Well, here, let me back up. In this system, we have pre-built 350 plus indicators. Could be closer to 400. but 22 of those are MFR, market force recognition indicators, MFR 22 with the name of the indicator line, like Zip Red or Trend Red or Power Red. Those 22 are put on the radar screen, and if you don't understand the radar screen, it's a grid system, it's a column system. You can load up to 1,000 symbols, and it is an extremely fast way to see what position the different lines are in simply by looking at those 22. Each box in the column of each indicator is color coded. A high right leg W pattern has a certain color. A bottlenose up has a certain color. A bottlenose down has a certain color. All of those color codes are defined in the documents index. Just punch a light item and look them up. Copy the colors until you become familiar with them. It's just like the abbreviations. Make a copy of that so that you can quickly reference that when I have an abbreviation of something. The system is unbelievable. No one that I know of is trading gaps, excuse me, anywhere that I've found on the internet. They say they're trading gaps. The open comes and they find a gap that's a stock that's really gapped one way or the other, and then they say, let's trade it. It's got high volatility. And so, but no one is trading gaps before the gap. No one has a system of identifying identifying market forces, tiny market pressures, except with sensitive indicators, like the ones that we spent years building. To only come back with 22 out of 12 or 13 or 1,400 that were built, it tells you something. The power of this system with the sensitive indicators, with the formula on getting choices that only have high probability, and with the procedure, you learn what's moving the price through the visual identification of how the indicators are reacting. I mean, we can see what's going to happen the next day. Why is the basic definition of a red spike is zip red down and under 50 and zip yellow down and above 50. They're, with good conditions. Keep in mind the best, there are a lot of different conditions. They're defined in each of the patterns. You can understand what and how they move, or what and how is required. It's amazing. We have something that I will admit there are indicators that we stumbled into that we are amazed how effective they work today. The relationship that Zip Green, Zip Zion, and Zip Pink have is amazing, and its power to tell you what's going to happen in the next day or two is amazing. Look at some of the pink-green top videos and the pink-green bottom videos, and you'll understand what I mean. Tremendous amount of information that I've just given you. I hope that you understand what this is all about. Come back and listen to this if there were things that you didn't understand, because the system is fantastic and no one is trading gaps. No one can even see the gaps. When you talk to people, they say, oh, you can't see markets move. And when I say we can see markets move, I don't mean that literally, but what I do mean is that we can see where and what indicators are doing, and specifically these 22 indicators. Without these 22, we wouldn't have the patterns, we wouldn't have the conditions. When I say that 22 market force recognition indicators are the heart of the system, they really are. But whatever you do, have fun trading. I spent 20 years or more in developing real estate in the state of Minnesota prior to in 2006 when the banks stopped funding small real estate developers like myself. I had a lot of fun doing that. And this is a lot of fun. If you want to get into trading, make it fun. You don't need to do a job that is something that you don't like to do. It's absolutely fantastic. Have fun trading.